Hey everyone, I am so excited to share this with you. Less than 1% of the population probably even knows this. So, today, are your clients waiting for lower interest rates? I know my clients were. And after today, you're going to be able to close more deals and reactivate your database. So, in this lesson, you're going to learn the exact strategies to closing more deals by attaining an effective interest rate below 4% in 24 hours or less. So here's a quick example of a buyer that I had met for the very first time about 3 months ago, and they weren't going to buy because they have a 6 month lease, and of course they were going to wait till interest rates come down. They happened to find a house that they really liked. I knew this was going to happen. I asked them if I could show them a strategy that can, obviously give them a favorable rate. And as I explained to them, their father happened to be there with them, and he was a former MLO. And yeah, I explained everything. I used my calculator that I have as an app on my phone, walked them through it, and they were really, really excited. The father couldn't believe it because he's been in the business for so long. And we ended up closing. The one thing that was quite interesting was that on the conventional financing addendum, I had to put in the type of product, and the listing agent asked me, "What is this?" And believe it or not, I said, "Well, you're going to have to call my lender anyway, so I'm going to tell you what it is." So she called my lender, and lo and behold, she called me back and said, "This thing is amazing. I cannot believe I've been in the business for 25 years, never seen anything like this. And my seller is actually going to use the same product when she moves to Florida." So yeah, it turned out to be crazy, and we ended up closing. Here's just a quick screenshot of the Alta for this particular settlement. I made 10,150. Here's another example of a client that actually he had an agent, and he already had a house, but he was casually looking because he wanted to find a place that was closer to his work. He didn't like the hour commute. And but like I said, he was just looking. And I said to him, "If I can show you a way to get your effective rate below 4%, would you be interested?" And he said, "Sure." So we did a quick Zoom call. I did his example, ran it through the financial calculator, and he was again amazed at the whole situation. He ended up making an offer. We won, and he referred me to two people. And he actually wants me to speak in front of his congregation and share the strategy with all his members. Here's a screenshot of his Alta. I made 24,375. This one was really interesting because it's a rental lead from realtor.com. I normally don't do rentals. Um, So I actually met this divorced couple. They split up. They had to find, or she had to find, a house close by. Excuse me, because she had to keep her kids in the same schools. So I said to her, "Well, do you plan on buying in the future after your lease is up?" And she said, "Yep, in about a year." And she and her ex, same position. So I told them the strategy so that they'll be prepared for a year from now, and they absolutely loved it. They thought that, wow, this is amazing that we've never heard this before. And because of my level of expertise in showing them, they asked me to list their house. It's now under contract. So yeah, something that I didn't expect because it was a rental lead. This was a client that I've already had a while back, and I went back to my database, and he was one of them that I want to run this scenario by him. And he said, "Well, can I do it now?" So we ran the numbers, and he had a 4% 30 year. So we reran it, and the numbers were positive in terms of him saving 143 grand and having his house paid off and lowering his effective rate to 1.9. So he went ahead and redid his loan, got approved, and he is completely satisfied. And he referred me to his neighbor across the street that is looking to move out and buy a large single family. So that's pretty cool. So just a quick summary of the total GCI. Some of the examples I just showed you, about 46,750 in closed deals. And what I have in the pipeline right now with listings and under contract, 93,000. I also have contacted all my clients in my database and start scheduling appointments with them because now, with the fact that they have the strategy, they're going to look at investment properties. They're not afraid of what the interest rates are. And the clients that were in my pipeline from some of these online places like Zillow and realtor.com, re-educated them as well. So they are all excited and starting to look, even though the inventory is scarce, but at least we get activity. So I promise you that what you're going to see if you start taking this course and asking around, only probably, and I'm even going to say less than 1% of lenders and realtors know about this. You don't have to do this. However, you do get the opportunity to learn it and take advantage of the situation and be part of that 1%. Here's what we're going to learn today. I'm going to first show you 3 applications that you can use right away. It's a simple and easy strategy to overcome the objection, I want to wait until interest rates come down. You're going to close more deals and win more clients by offering a unique solution that no one else has. You're going to have more referrals because you can share this unique and valuable information with your old database and spend less on paid lead services. You're going to have the solution to lower that effective interest rate below 4%, saving your clients up to 70% in total interest paid. And this is going to be a great reason to stay in touch with your clients in addition to your normal birthday and holiday reminders, because now you can contact your clients, let's say every quarter, let them know how they're doing, whether they're ahead or whether they're not. And again, it's another time that you can ask them, is there anybody that you know that would like to also save on this? Because it doesn't have to be new clients that they know or new buyers. It could just be friends that already have a mortgage that they just want to save money. So now you're going to become that person that's sharing ideas so that when they do want to buy a future home, or if they want to save money now, you have the solution. Allow me to introduce myself. My name is Sean Durr. I'm 15 years as a real estate agent. I was also 15 years in the financial services industry. I was a former registered advisor and a CFO of two tech companies. I'm also a real estate investor. That's how actually I got involved into real estate in the first place. And all the information I'm showing you has been verified by the lending and financial institutions and also by my CPA. I actually, when I ran this by my CPA, I asked him to do a verification letter for me so that he can verify all my findings and make sure that everything I was saying was truthful based upon the assumptions I gave him. And he was surprised at the information, and he said, "Yeah, I mean, this makes sense." He didn't even know that this existed, but he said, "Math is math," and yes, it does work. All right, let's get started with these 3 applications. The first one is going to be using it with a new buyer in today's market. I'm going to use 6%, 30-year, $500,000 home, 10% down with $10,000 income. The second one will be a new buyer in today's market, but using a 15-year mortgage, 5%, 15 years, 500,000, 10% down, 10,000 income. And then finally, an old client that may have a very low mortgage, and let's say they're already 3 years in, at 3%, 500,000, 10% down, $10,000 in income. Okay, so I'm going to move quickly here, not to waste your time. This is the customized financial calculator. So we enter in the type of product and the loan balance 30-year fix, comparing it with a 6% interest rate. Second, we're going to include their financials: 10,000 in monthly income, 3,000 in household monthly expenses, not including any rent or mortgage because that's already taken into consideration. And here are the results. A 30-year traditional mortgage, you're going to be paying $521,000 in total interest versus $128,000 with the new loan, saving $392,000 in interest and having the house paid off in 7 years. Okay, let's look at the details here. On the traditional loan, the average principal accumulated is only 3.3%. The cost of money, which is the interest as a percent of principal, is 115%. On the new loan, you're going to be gaining 14.3% of equity every year. The cost of money is only 28%, and the effective interest rate is now 1.753. This amortization table really hits it home. On the right side, total principal after 24 months, 2 years, has only accumulated $11,000, whereas a new loan, you're already at $102,000. After 84 months, The traditional loan still only accumulated $46,000, still owing 403. On the new loan, you're completely paid off. Application number 2, let's assume that we have a new buyer, again, using a 15-year mortgage at 5%. Same financials, $10,000 a month in income, $3,000 a month in household expenses, not including rent or the mortgage payment. The 15-year mortgage, total cost of interest is $190,000. The new loan is going to be $128,000, still saving $61,000. Again, we look at the fine details here. The average principal accumulated in a 15-year mortgage, 6.7%. Cost of money, 42.3%. On the new loan, same figures here, 14.3%, and in principal accumulated every year. Cost of money, 28.7. Effective rate, 3.49. And after 84 months, the 15-year will accumulate at $168,000, still owing $281,000, whereas the other loan is done. So a client can still be contingent here on buying their next home using a 15-year mortgage. All right, let's run the final application with an old client at 3%, 3 years in. A lot of times this is what agents want me to run for them after they see this, just to see what it looks like. But now you have a way of contacting your old clients. We're going to use a 30-year fix, 3% interest rate, and 36 months already in. Same thing, $10,000 a month in income, $3,000 a month in household expenses, not including the mortgage payment or rent. After 27 years, you would have paid a total of $207,000 of interest under a 3% scenario, versus the new loan, $128,000 in total interest, still saving $78,000 against a 3% mortgage that has already been 3 years old. Average equity accumulated with 27 years left, 3.7 per year. Again, average accumulated equity, 14.3% in the new loan. Comparative interest rate, 1.753. And of course, we're still going to win here. After 12 months, you're going to accumulate $10,988, still owing $439. In the new loan, you've already accumulated $47,000 in equity after 12 months. And then finally, $84,000 accumulated in the existing loan, still owing $365,000. And after 84 months, we are done with the new loan. Okay, at this point, a lot of times people are starting to notice that besides getting a lower effective interest rate, we're paying the mortgage off faster and saving them in all that interest. Some common questions are, well, I see that basically I'm accelerating the mortgage, and there are other ways to do that. Absolutely, but they're not effective. The first one, pay extra principal. We're not paying extra principal here. I'll show you in a moment why that is the case. But when people say I can pay extra principal, the problem is that there's no discipline, there's no consistency, and most people forget to do it. The other main issue is that every extra principal payment, whether it's large or small, you have no access to get that money back out. So if you had like $50,000 from a bonus or whatever, you got some money as a gift, and you want to pay down your principal balance, sure, you can dump all that money in, but the moment you give 50 grand, that money is not reusable. So you're probably not going to put all your money in there because you want to have access to funds in case of emergency. So you might only give a little bit. The second, biweekly mortgage. Another common way to shorten it. It only shaves the mortgage off by 10 to 12 years. It doesn't address the first 10 years of front-loaded interest. So again, not a product that's effective. So here are the 4 steps that you will learn. You're going to learn the financial engineering strategy to lower the effective interest rate, implementing the money movement concept, which is a conceptual framework using macroeconomics and factoring the time value of money. We're going to show you how to use the financial comparison calculator to run a variety of scenarios for your clients and using a sweep banking technique. Step two, you're going to understand the concealed traps and pitfalls of 30-year mortgages and changing your mindset, comparing the way interest rates are calculated for different types of loans. And you're going to learn the financial literacy to be able to present to clients. In step three, you're going to qualify your clients and introduce the strategy and the products from the FDIC banks and financial institutions that have them. And then finally, because of this, you're going to position yourself as a unique authority and leader in your market. So what do banks do? The power of the money movement concept strategically keeps funds in circulation. And by doing this, you're going to gain financial rewards. It involves the active engagement of keeping money in motion as opposed to keeping money stagnant, which is exactly what consumers do because we put money in a savings account, CD, investments in our properties, and it just sits there and does one thing. Whereas what do the banks do? They take our money and they reinvest it. They borrow again and again and again. So the dollar is being used multiple times versus our dollar only is being used once. So using a sweep banking technique, which lowers the effective interest rate and saves up to 70% in total interest, accelerates the mortgage payoff. And the most important thing here is you have complete access to funds. The money is reusable. Money goes back and forth. You can do whatever you want with it. A regular mortgage is close-ended. You cannot do whatever you want with all that equity you have in there. So again, the whole idea is keeping everything reusable. So some other common questions that people ask when comparing these two products is, what happens in a foreclosure? Unexpected hardship. Well, in a regular mortgage, it doesn't matter whether you're 5 years in or 25 years in. If you miss your payments, you're still going to go into that pre-foreclosure situation, thereby damaging your credit, putting you in distress, causing you to possibly have to sell your home at a discounted value and losing some of that equity. New loan, you can't do that. It won't happen because since you have full access, you can take extra money out from your equity, use it as you like, get your life back in order 3 to 4 months later, and just start from there. So what if you don't pay your house off in 7 or 8 years and it takes you 9 years or 10 years to pay off? You're still so way ahead of the situation and your credit is not damaged and you're not stressed out. What does it mean to have full access? I mean 24/7 access, debit card, checkbook, online banking. What happens if the loan is paid off? You still have access to 90% of the value of your home up to 30 years, as long as you still own it. So as you start listening to this presentation and when you finish the course, you're going to understand and realize that the interest rates is not the enemy. It's not the issue. It's the time and balance that's the issue. I always like to use a credit card as an example because, the credit cards charge us 18 to 24% if we let it sit, right? But if you pay it off within the grace period, then it's gone and you don't pay anything. If you pay it off in 1 month, you're not paying the full year. If you're not paying it off, if you let it sit and pay a little bit every month, yeah, you're paying a lot. So you see, by letting it sit, that's the time. And if you let a large balance sit, that's a lot of money that's being charged in interest. So our mortgage is probably our largest liability. So if you're letting that sit and you're only reducing the balance by a little bit every single month, a quarter of a percent every single month, that's a lot of money. And it doesn't matter what the interest rate is. Versus if you shorten the time, the interest rate can be high and it doesn't mean anything because the balance is so low. Make sense? Think about this. Buyers can buy the home they really want instead of sacrificing because the savings and interest probably outweighs the cost of the lesser home. In fact, using this program, I bet, and again, just run the numbers, the total cost of the nicer home probably costs less than the cost of the lesser home over 30 years. Step number 2, this is more of an education and changing mindset. Understanding the concealed traps in 30-year mortgages. Because why? Well, what happens in the first 5 to 7 years? People move. People refinance. What's the consequence? We restart that 30-year cycle all over again, just like that movie Groundhog Day. The truth is that in your payments, On a 30-year mortgage, the principal portion represents only approximately 3% a year, or only a quarter of a percent per month. Industry experts say it's better to buy instead of rent. Well, that's absolutely true. But the problem is that the 30-year mortgage is not designed for today's issues and changing environment that costs your clients money. Essentially, your bank is your landlord. So here's another truthful fact. 86 million homeowners have a 30-year mortgage. The average person, according to the U.S. Census Bureau, is they move 11.7 times, upsizing, downsizing, changing home types from townhouse to single family, job relocation, family status changes. Hate to say it, divorce, increased family size, empty nesters. The other thing is that people focus on interest rates. They don't focus on the balance or the time. Final step, you're going to qualify your clients using the financial calculator. And once you do that and determine the level of benefit, when they want to move forward, you refer them to the FDIC banks and the reputable institutions that have these exact products. This is probably the most popular question that I get asked by everybody, because when I'm usually done, everything makes sense. And people say, why is the general public unaware of this? So real quickly, when you take a look at it from a lender's perspective, since the majority of buyers in the population are, infatuated with rates and costs, points, stuff like that, lenders cannot take the time to explain this product. All right. They gotta spit out a rate. And you know what's going to happen? That buyer's going to call another lender and shop. That's just the way it is. So if the lender attempts to try to do it, they're going to possibly lose the client. Because again, buyers are infatuated with rates. Buyers don't monitor their mortgage balance. A lot of people ask, what is your mortgage balance? They don't know. They got to go back and look. But everybody knows what their credit card balance is, because why? They pay attention to that. They know that they don't want to leave a balance. But people have no problem leaving that large balance on a mortgage because it's just the way it is. The other thing is that the banks make less money, right? I mean, if you're paying less interest, they're making less money. And if they're making less money, they're not going to advertise it. CPAs and financial advisors, financial planners, they understand this. But here's the problem. They do not play a role in buying a house with people, with their clients, right? You don't take your financial advisor and CPA with you when you're looking at houses and talking to the lender. However, the very few that maybe do that will discover this loan if that particular lender has it, because now the lender can take the time to talk to the CPA and financial advisor. All right. But like I said, CPAs and financial advisors do not play a role when it comes to buying a house. This is not taught in school. And like in everything else, we tend to follow the crowd. 99% of people do it this way, meaning they do a 30-year mortgage. So, if everybody's doing it, we probably think that's the only way to do it. And of course, it's not the case. And again, just to remind you, if you were able to do all this, you're going to close more deals. You're going to be able to get referrals, awaken that database. Type in chat if this makes sense to you. If you have any questions at this point, please type them in. So you might be thinking, how do I present this to my clients? Not to worry. Everything that I will provide is all factual and mathematically proven. Again, you're going to have examples in the course, video examples and exact scripts on what I say to my clients. And you don't really need to be the expert. You just need to show them the numbers and the comparison, because in the end, all this is going to be backed by the lending institutions that have the products that's going to prove everything that we're saying. So you're just really going to be the messenger. So when you finish, you're going to be able to position yourself as an authority and leader in your market. Why? Because you're going to know something and learn something that majority of the real estate agents and lenders do not know. And you're going to be able to, help your clients buy houses without losing them to high interest rates. So just ask yourself, what would your clients say if you could offer something like this? It's exactly what I say to my clients. If I could show you a way where you can have an effective rate lower than 4% and possibly save you hundreds of thousands of dollars on total interest paid, and you can do this without changing your lifestyle, would that be something that you want to learn? And Everybody should be saying yes to this, even yourself. So how do we get started? So, you could do it yourself. Although, just like with me, I mean, I've been in the business for so long, both finance and real estate. I didn't know about this until several years ago. So, part of having the solution is knowing the problem, or knowing that is there even a problem. And if you don't know it, you're not going to be able to have a solution. So, if you've already been in the business for 5, 10, 15, 30 years, and if you don't know this by now, you probably would never see it again. Um, and then, of course, learning the strategy, finding the banks and institutions. When I first learned about it, I called every bank locally, and they acted like I was, a two-headed animal. They said you can't do that, and I'm like, oh, really? So it's not that easy to just call your local bank, because again, not every bank has the products. Every bank is different. So we have a list of the banks and institutions that do have this. How to present it to your clients. There is a different way that you're going to present, because it's an education. It's not a sales pitch. But so you're going to have to be able to overcome a lot of questions, or maybe they might ask their financial advisors or CPAs, or they might ask their parents. So you need to be able to show them uh, and be completely transparent, and show them the math, because math doesn't lie, and that's the bottom line. The consequence of doing it yourself is really the time. Um, do you want to wait and try to figure it out, or do you want to be able to close more deals now? Um, and then, now that you know about this and it's available, you could be costing your clients, because you could be saving your clients a lot of money now, so that they can, buy their next property or buy an investment property. Um, and I'm sure that eventually, as this word gets out, especially with the fact that interest rates are higher now, and as more people start to learn about, and more banks start to carry the product, it's not going to be something special. So, if you can be the first one in, you're going to be the hero. Your time is money. I spent time developing the course. We have weekly coaching. We have the customized loan comparison calculator. We have the list of banks. We also put together a private community, so that all of us can share and ask questions. And I promise you that if you get on the one-on-one coaching after you finish the course, you should be able to learn all this in less than 24 hours and be ready to roll. So that's why you should select option 2, right? Work with us. You're going to learn the strategy in less than 24 hours. I'm going to give you the custom loan comparison calculator tool. When you're finished the course, I will do a one-on-one with you, so you can ask questions on anything. And I mean anything, all right? I want you to close more deals. I want you to learn this and spread it around. You're going to get the access to all the banks and institutions, and you're going to have the scripts you need. The cost of this course is going to be less than 10% of one deal. A lot of agents ask me, I don't have they might say, I don't have a financial background. Can I still do this? Absolutely. The concepts and products are common knowledge. The light bulb is going to turn on the moment you go through this. It's just not advertised or put together in a strategic framework. And that's what we do here. Are there plenty of institutions that have this product? Absolutely, there are. In fact, a lot of brokerages broker it from the banks. They just don't know they have the product, which is crazy, but that's that's the situation. They don't know it. So again, you need to be the objective voice in helping your clients save money, because the lenders can't do it. Other real estate agents are not going to be able to do it. So you need to be that objective person and provide, advice to your clientele and helping them save money. I promise you, when you finish this, I'm going to give you the exact roadmap and how to succeed with this. I'm sure you're going to be able to help me too, as we share ideas. So this is the current price for the course. Like I said, it's less than 10% of one deal. You're going to be able to use this in a multitude of different ways. You can get referrals from it. I promise you, your future self is going to thank you. And real quickly, just to go over all the bonuses. You can get weekly coaching. You have access to the private group 24/7. You're going to get access to the customized financial calculator tool. We're constantly updating it, making it better, so that if we want to add things to it, you can also give me feedback, and I have an IT guy that will constantly make it better and better. You're going to get the complete list of banks that have the product and strategy, And as we bring in more banks and lending institutions, especially like the one that's going to customize one for us, you're going to get access to that too. And finally, I think having a private community is very important because you're going to be, one of the few that's going to, obtain this knowledge, and being able to share questions and experiences with each other is only going to help and grow our business. So I highly encourage you that, if you take on this course, learn it quickly, contact your immediate buyers, contact sellers that are on the fence, reactivate your database and send examples to them. Speak at events and share this expertise to everybody that you know. Become the leader of it. Even contact online leads that you think that you might have lost, or maybe if they even had an agent, you just decide not to move forward with it. Again, it's something that you can help your fellow agent with. We're getting a lot of traction in this course. I'm only one person, although we have a small staff at this time. So therefore, the price will have to go up eventually. But for now, you can get in on this price. But as I have to bring on more people, the price will go up. At the same time, don't be the last one. Like I said, everybody's going to start to catch on. And this strategy does work regardless what kind of real estate market we're in. It doesn't matter what the interest rates are. It can be at 2%. It can be at 9%. It can be a seller's market or a buyer's market. It doesn't matter. You really can be the best you can be. As real estate agents, we handle transactions. It's part of what we do in our professional career. But today, you can be that person that actually makes a difference in your clients' lives. You can be that person that helps them get their dream home and save them a lot of money. You can be that person that, now that they've have that extra money, fund their children's college education. You can be that person that's also going to accelerate and fund your client's retirement. If they have a financial advisor, you're going to be the hero here. So be passionate about what you can do and what you can offer, and let's grow this real estate industry together. I'm completely transparent with this. We offer a satisfaction guarantee. If for any reason you find that there was no value in this course, or none of your clients can qualify, just let us know. So here's a step-by-step process if you want to fast track this in 24 hours. Number one, enroll in the course. Go through all the lessons. It doesn't take long at all. It's not like 30 lessons, okay? It's like 5 or 6, and they're not that long. Read through the scripts and the Q&A. Watch my videos that I have of loan comparisons, because I compare it against 7 versus 5, 7 versus 4%, 7 versus 3%. I just do all these comparisons so that you can see different scenarios. Run the scenarios for your top 5 buyers and your 10 to 15 clients from last year. Start drumming up referral business from it. Write down all the questions that you think you might have, as well as what your clients might have. And once you complete all that, set up a coaching call with me one-on-one, and we're going to go through all this and get you rolling right away. So let's get started. Click and enroll today. I look forward to working with every one of you. My contact information is right there. I am completely transparent to all this information, and I want to thank you for attending the webinar. Take care.